What's good, you guys, and welcome back to my channel. My name is Ricky, and this is the Ricky and Nikki Accounting YouTube channel where we discuss all things financial literacy. So, of course, we talk about accounting services like bookkeeping, tax preparation, tax planning, but we also go over credit repair, credit building, business funding, investing, all things financial literacy. So if this is something that you're interested in, you found the right channel. If you're new to the channel, welcome. And if you're a returning subscriber, welcome back because we got a goodie for you guys today. And this video is more or less like a beginner intro video because I have a lot of people DMing me. I have a lot of my clients who weren't too knowledgeable on this topic, but today we're going to be talking about what is a credit score? And I feel like this video was very necessary. I should have made it a long time ago, but nonetheless, we are here. But why is this video so important? Because credit is everything. We need credit for everything. If you want to get a house, you need good credit. If you want to get a car, you need good credit. If you're trying to get an apartment, you need good credit. So video is very, very important, especially for those of you who are young, high school and college, just getting into the real world and don't realize how important credit is. You need to watch this video. And if you're somebody out there who has a young one in the family or somebody who's in college, send them this video so they can be aware of what to do and what not to do when it comes to credit. So how this video is going to be broken down is I'm going to explain what a credit score is. Then I'm going to go over the factors of how a credit score is calculated. Then I'm going to talk about the differences between a credit score and a credit report because there is a difference between the two. And then I'm going to talk about why credit is so important. Then I'm going to talk about how to maintain good credit, and stick around to the end because this is where you're going to get the sauce. This is where you're going to want to pay attention. We're going to talk about how to boost your credit fast. Now, if you're somebody with no credit, like I said, you young ones who are just going to college or just getting out of high school, or if you have bad credit, because that's what I deal with the most. When I'm repairing somebody's credit, it's because they have bad credit. So stick around to the end so you can see what you can do to boost your score fast. Now, with all that being said, let's dive straight in. So, what is a credit score? So let's read it. I wrote it down right here for you. It says, a credit score is a numerical rating that represents your credit worthiness, typically ranging from 300 to 850. 300 is the lowest your credit score can be. Sometimes, like I've had clients where they don't even have a score. That's because they don't have any credit at all. But yeah, the lowest your credit score can be is a 300, and the highest you can have is an 850. But it is based on your credit history and it is used by lenders to determine the likelihood of you repaying your debts. So essentially, it's like a report card. It's like a transcript. So this is how banks and other lenders see if you are trustworthy enough for them to lend you a credit line of credit, a vehicle, a house, anything that involving credit. They go off of your report. That's why it's very important for you to have a good credit score because they're gonna go over that. And if your credit is not in line, you're gonna get denied. And we don't want denials. We want instant approvals. So let's go over the key factors of how a credit score is calculated because there's five. Now, the first one is the most important. It's worth the most. It's payment history, and that's worth 35% of your credit score. That's a big chunk. And that's very simple. That's if you're making your payments on all your bills on time. So if you have a missed payment, that's going to drop your score. But if you continue to make your payments on time, your score is going to maintain at a good rating. Now, next is credit utilization. That's the second highest. That's worth 30%. And our credit utilization is, let's say you have credit, the amount of credit that you're using is what your credit utilization is. So let's say you have $1,000 credit card. If you're using $500 of that credit card, your credit utilization is 50%. And obviously, the higher your or it's not. Let me correct myself because it's not obvious because a lot of people don't even realize that the higher your utilization is, the lower your credit score is going to be. Because I remember I had a client saying, "Oh, yeah, no, my credit utilization is pretty good. I'm at a 70%." And I was just like, um, that's not a good thing, sir. There, he was like, what do you mean? I thought the higher you are, the better it is. I'm like, no, sirree. The higher your utilization is, the lower your score is gonna be. Like as the more credit that you're using and not paying back, because that's why it's dropping. Because if your utilization is high, that means you're maxing out your cards and you're not paying it back. And just because you're making your minimum payments on time, that doesn't mean that's gonna lower your utilization. You're just making your payment on time, which is good for your payment history, but for utilization, no bueno. So next up is credit age. That's worth 15% of your total credit score. And credit age is the amount of time that you've had credit. Just because you're somebody who's, let's say, like somebody who's 50 years old and they've been dealing with credit for X amount of years, a whole lot of years, that doesn't mean their credit age is going to be as old as they are, because it's based off of the accounts. So let's say you have an account that you've had for 10 years, and then you have account that you just opened up. So your credit age just went from 10 years, and since you just opened up a new account, it's averaging. So now it dropped in half. So now your whole credit age is 5 years. So it's an average of what all your open accounts are. Next is the credit mix. Credit mix is worth 10%. And the credit mix, what that is the types of credit that you have, because there's different types of credits. There's credit cards, there's personal loans, there's vehicle loans, there's mortgages. So that is what the credit mix is. And to have a good credit mix, you want to have at least three types of credit. And then last but not least is new credit. So when you're applying for credit and you have those inquiries, that's new credit. And that is the last 10% to make the total 100% of a credit score. Now let's move on to talk about the difference between a credit report and a credit score. I really want to like talk a little bit more besides of what I wrote there, because a lot of people has it confused that they only think that the credit score is what matters, when in reality, it's the credit report that what truly matters, because that is what is going to determine if you're going to get approved or not. Yes, for certain things, you have to have a specific score, but it's all about what's on the report, because you can have a 700, but if you have a charge off on your account or some collections, you're still gonna get denied, because they're gonna look at it like, why would I lend you something if I can clearly see you're not good with paying people back? You got collections, you got charge-offs. I don't even know how you got a 700. That is possible though. That very much is possible. But they're gonna look at it like, bro, I don't care that you got a 700. You haven't paid back Verizon, you haven't paid back all these people. Why? What's gonna make me believe you're gonna pay me back? I'm not lending you nothing. Denied. So that is why the credit report is more important than the credit score. But let's read what I wrote down. So a credit report is a detailed report of your credit history. A credit score is the numerical summary of the information on your report. So they go hand in hand, but from what I've dealt with all these years with myself and clients, the report is what matters more, because you can boost your score fast, but it's what matters is what's on your report. So now let's move on to the next slide. Why is credit important? I feel like that's pretty self-explanatory, but I'm gonna go over the 9 reasons why credit is so important. Number one, easier approval odds for credit. Now that should be very self-explanatory. If I have a 750 and you have a 650, who do you think is gonna get approved? And if we do both happen to get approved, who do you think is gonna get a better rate? Who do you think is gonna get a lower interest rate? And who do you think is gonna get a higher credit limit? The person with better credit. So that is one reason why credit is important. Reason number two, access to higher credit limits. The higher your credit score is, the higher your credit limit is going to be. But in a case like this is another case where a credit report is very, very important, because let's say you have a 750, but you don't really have credit cards with high limits. What banks do most of the time, they give you limits based off of what you already have. It's kind of like a comparative type of thing. So like if they see that you keep getting 300, 500, 700, $600 limits, they're most likely going to give you that. But if you have higher credit limits, like if you have 1,000, 2,000, 3,000, 5,000, 10,000, that's most likely what you're going to get approved for. So that's why, but that one, it's a little bit iffy, but nonetheless, the higher your credit score is, the better chance you're going to get a higher credit limit. Now, reason number three of why credit is so important, lower interest rates. Like I just said in the beginning, somebody who has a 700 credit score is going to get lower interest rates than somebody who has a 600 credit score. Somebody who has a higher credit score obviously is more reliable and more trustworthy and more responsible with handling credit and making payments. So of course they're gonna be treated better. They're gonna get better benefits. They're gonna get lower rates. So that is another reason why credit is very important. Reason number four, lower insurance premiums. Reason number five, access to vehicles and utilities without a deposit. Now, you may have never dealt with getting a vehicle without having to put a down payment down because most people from where I come from, they don't work on their credit or even know about credit before they go ahead and get a vehicle. Just like myself, I got a vehicle. I went and got an auto loan when I was either 19 or 20. This is when I was in the Marine Corps. I finally wanted a car. I was tired. This is when I came back from deployment and I just got tired of asking for rides and walking everywhere and taking cabs because at the time there wasn't no Uber. So yeah, I wanted to get a car, and at the time, the Marine Corps wasn't paying me much. I was a Lance Corporal. I was a E3, so I wasn't really making much, and I couldn't afford to get a car, like buy a good car. So I went and financed one. But the thing is, I at the time I actually did have good credit. I was in the high 700s. I had a $2,000 credit card. That was my only credit. No, I had two credit cards at the times. I had a Navy Federal one that was worth 2,000. That was my first credit card, and then I also had what was the other one? It was a it was an Old Navy credit card. Don't judge me, but I remember right before deployment, I wanted to get a. I was in Old Navy with one of my friends. We were just grabbing a few things for deployment, and they offered me at the counter. You know how these stores are, these retail stores are. They're like, oh, you can save 20% if you get this Old Navy credit card, and I was like, shit, sure, why not? I mean, because the thing is, at that time, like I had a credit card, but I didn't know how credit worked. Nobody taught me. Just like most of us where we come from, we're not taught about credit, which is unfortunate because our parents know about credit. Like they may not know the ins and outs about it and how credit works and what they should do and what they shouldn't do, but they know how important credit is. So the fact that they don't teach us and the fact that they don't teach us in school is mind-boggling because this is one of the most important things you're gonna need in life is credit. Yeah, but back to the access to vehicles. Since I had good credit at that time, I mean I have good credit now, but at that time I was at a I wish I remember. I knew I was in the high 700s though, but I didn't have to put a down payment on the car I got. I had an Acura TSX. I do miss that car a lot, but yeah, I didn't have to put a down payment down. Why? Because I had good credit. So that is a one major reason why you want to have good credit because a lot of people want credit so they can go and get a car, but then they have to put down 5, 10, 15. I had a I was on a consultation call the other day, actually last week, and he was telling me how he was trying to get a dump truck because he runs like a landscaping business, and he was trying to get a dump truck, and they were telling him that he was gonna have to put $13,000 down, and he was like, I'm not gonna do that for all that. I could just go ahead and just pay cash and get one. He didn't want to do that. That's why he went to try to finance one, but when they told him that he had to put $13,000 down, he was just like, "Oh no!" But that is a reason why you want to have good credit, so you don't even have to put a down payment down. Like if you got it, then sure, go ahead and do it. But if you don't have to, then why would you? You know? Now, this one, a lot of people don't even realize this, but I dealt with this firsthand. So, number six, why you want to have good credit is for employment opportunities. So I used to work at a credit union back in 2019, and then I left during COVID because COVID shut everything down. And then when everything came back up, I just didn't really feel like going back. Plus, because that's when I was in college, so I really wanted to just focus on that anyway. I was just doing that for the experience because I was in the accounting field, and I felt like working at a bank would be good with working with finances and dealing with accounting and stuff like that. So I just felt like at the time it was a good look for me to work there because before that I was a manager at a GNC because I'm into fitness, but yeah, so anyways, back to why credit affects employment opportunities. When I was going through my interviewing process, they asked for my credit score and they ended up doing like a soft pull on my credit and I was just like, is this the thing? They were like to get the job, and they were like, yeah, no, it's a part of it. You need to have a specific. I forgot what the score was. I honestly don't even know if it was a specific score they were looking for. I don't remember. But all I know is they wanted to see my credit in order for me to work there, and that blew my mind. I was like, what? You need to have good credit to get a job? I was like, wow, that's insane. But yeah, not every job does this. It's probably certain professions, but just know if there's certain jobs out there where you will need they will look at your credit, and if your credit ain't where it needs to be, you might not get that job. So you might want to just keep your credit in good standing because you never know. Now, reason number seven, more favorable loan terms. That's at this point, I can say that's kind of obvious because based off of the first six reasons I told you, if your credit is good versus somebody whose credit is bad, you're gonna get more favorable terms than somebody who isn't. If I have a 750 and you have a 650, I'm more than likely to getting a credit card at 0% APR than you are, because you're probably going to get something like 15% or more, you know? So more favorable loan terms for somebody with good credit over somebody with bad credit. Number eight, financial flexibility and confidence. Reason why that is on this list is because somebody who has good credit, they don't have to stress about not being able to come up with funds, because if all else fails, they don't have nothing right now. They just lost everything. They can go ahead and get access to some credit. If they got a good credit score, they can go ahead, hit up a bank, hit up a credit union, go online and just be able to instantly get approved for a personal loan that can hold them down until they can start getting back on their feet. But that's also a little bit dangerous because you don't want to try to live off of credit. But if you're a go-getter, if you're somebody who just once something knocks you down, you can get right back up, but you just need a little push, this is where something like that can come into play. And it just gives you confidence, like, okay, I just lost my job. I know I'm gonna get a job real quick soon, but I gotta pay these bills for this month. So let me go ahead, and it just makes you feel confident. Like, oh, I'm not gonna stress it. Like, I'm not gonna stress it because I know I'm gonna be able to maintain it, be everything I got to take care of this month because I'm gonna get something soon. I'm a go getter. I'm gonna get to it. So it just gives you peace of mind, like, all right, cool, like, yeah, I lost this, but it's all right, I'm gonna get it back anyway. Let me just pay this off real quick and do what I gotta do. So it just makes you feel more at ease, because if you have bad credit and you're broke, I know you're gonna be going through it. Trust me, I've been there. I've been there because I've been on the side with good credit, then I had bad credit, then I had terrible credit, now to the point where I got myself back with good credit again. And I don't want you guys to be discouraged, because if you have bad credit, all it takes is determination, consistency, and hard work. Because me myself, I'm gonna be open with you guys. I just last year, I was at a what was it? It was either a 521 or a 512. It was one of the two. I always forget the last two numbers, but it was one of the two. But the point is, just in 4 months, just in 4 short months, I was able to get from a 512 or 521 to a 717. I definitely remember that 717 because when I got to that, I was like, wow, I was the happiest man alive. I was jumping for joy. I was telling wifey, I'm just like, nah, see, I knew it was possible. I just had to figure out the ways to do it, which is why I said you got to stick around to the end, because that's where you're gonna get the sauce. That's where you're gonna get all the ways to get your score fast. At the end is where I'm gonna tell you guys how I got my score to 717 in just that 4 months. Now I'm higher than that, but that last slide is literally how I got my score boosted that fast. And if I could do it, you could do it. Anybody could do it as long as you putting in that effort, staying positive, staying motivated, and staying on your shit. It can be done. And then the last one, which is what I talk about the most on my Instagram. So if you don't follow me on Instagram, go ahead and follow me on Instagram. I'm gonna put it right here, and it's gonna be in the description as well. But go ahead and follow me on the gram. I'm very active on the gram. I'm on that platform more than anything. But you can also follow me on TikTok. Obviously, subscribe to the channel if you haven't already. First off, if you haven't subscribed and liked this video, you're doing bad. Go ahead and hit that like and hit that notification bell so you don't miss out on any other video that I be dropping. I'm gonna be dropping videos very consistently. I drop a video at least once a week, and then I'm dropping shorts damn near daily. So, but yeah, so I talk about investing with no money because you can't do that. I know you're probably looking at me right now like, how the fuck are you gonna invest with no money? OPM. What is OPM? Other people's money. You can invest money by getting approved for credit cards, lines of credits, personal loans. So using other people's money to invest. And why I like doing that better than just using my own capital is because there's many reasons, but I'm gonna give you two right now. For one, when you invest into something, it's never a guarantee. It could go great and you can double, triple, quadruple your money, or you can just completely take a loss and lose everything you just invested. So if you're using your own money, first off, you gotta save that money. You gotta work to get that money, then you invest it, and then if you take that loss, then you're shit out of luck and you gotta go back, start hustling again, and then retry it again. But if you use OPM, you don't got to worry about that because if you take that loss, you're like, all right, let me just continue to invest and do it over again. You know what I'm saying? You can just continue to just try to run it up again, try to make a better investment, do it smart because like you tried something, it didn't work, but okay, now you still have your own money. You still have your own money, so you can pay off the credit card or the loan or whatever, and then just reinvest. Now, the other reason why I like OPM better is because when you're investing with your own money, you're investing with money that was taxed. You like I'm an accountant. I do taxes. I do tax preparation for individuals and businesses. Why would you want to? Because you're taxed on everything. You're taxed on the money you make. You're taxed on the money when you buy stuff. Like it's crazy. You're taxed all the time. So why would you want to use taxed money that you can use for whatever else, including paying these credit cards that you're going to be investing with, when you can use OPM? Debt, which is OPM, credit cards, all that is considered debt. Debt is not income. So debt cannot be taxed. So you can invest tax free. That is the main reason why I like OPM. But now we just went over the 9 reasons why I feel like credit is important. Let's move on to the next slide. How to maintain good credit. This is simple. I'm not going to go too in depth with this, but pay your bills on time. That's going to help with your payment history. Keeping credit card balances low. That's going to keep your utilization low, which is going to keep your score high. Avoid opening too many accounts at once. The reason why you don't want to open too many accounts at once is because one is going to, when you open up a new account, your score drops because your credit age drops because you just opened up a new account. And then when you're opening up a bunch of accounts at the same time, you're gonna start getting denied probably after the third the third one because banks and lenders are gonna be like, you look pretty much you look desperate for money, and that's not the type of people institutions want to give money to. They want to feel comfortable knowing that this person is going to pay me back, and if they're thirsty for money, if they're nonstop applying, you look very desperate, and they're gonna be like, "Nah, you're a red flag, pretty much. They're not gonna fuck with you." So that's why you want to avoid trying to open up a bunch of new accounts at once. Keep old credit accounts open to maintain good credit age. Because like I said, because like let's say you're somebody who just tried to apply for 6 new accounts, right? And then you have a credit card from like 15 years ago that you're like, I don't really want it no more. I don't really use it anymore. I'm just gonna go ahead and cancel it. As soon as you cancel that card, your credit score is gonna drop dramatically for two reasons. One, your utilization is gonna drop, but if it's not a credit card account, let's say it's like a student loan or something, sometimes you don't want to delete your student loans. I know some people be wanting to delete their student loans, but you don't really want to do that, especially if your student loan payments are always on time. If it's in good standing, you want to keep old accounts open because it's gonna help keep your credit age high. You don't want to have a low credit age. Next is check your report for errors, then dispute. You want to check your credit report as often as you check your bank account. I know people who check their bank account daily. I check my bank account daily, but I also check my credit reports daily. You always want to check your credit reports for many, many reasons. One, because you want to make sure everything on your report is accurate. If it's not accurate, you got to go ahead and dispute it. Another reason is because there's a lot of scams that go on. There's a lot of data breaches that go on. There's a lot of funniness that goes on, and people somehow get information. There's data breaches, and they get your information and they open things up under your name. So, which is why you want to make sure you're always checking your credit report. Or, what you could do to make it easier, if you're somebody who's like, I don't feel like checking my credit all the time, put a credit freeze on your account. Just call Experian, call TransUnion, call Equifax, or you may be able to even do it on the app. And you freeze your credit reports. That way, if somebody gets your information and they try to apply, it won't go through. You will get notified like, hey, are you trying to apply for this? No, I'm not. Denied, because you just had your report frozen. But you always want to make sure you're checking your credit report. Now, if you made it this far, you're about to get into the sauce. Now you're about to get into the game on how to boost your score fast. But if before I even do that, if you haven't already, please go ahead and hit that like button and go ahead and subscribe to the channel because I'm gonna be dropping a lot more heat for you guys. But with that being said, let's go ahead and talk about it. Let's talk about how to boost your credit score fast, and let's talk about how I boosted my credit score fast. So the first thing you're gonna want to do. Actually, I kind of didn't put this in order. Number two should be number one, but you're gonna want to look at your credit report and see if you have negative accounts. If you have negative accounts, the first thing you're gonna want to do is dispute them to get them deleted. Then what you're gonna want to do is lower your credit card balances or just bring down your total utilization. You want to have it below 30%. A good credit utilization is 30% and lower. You don't want to be above that. Once you're above that, you're not going to be your score is going to start dropping. Now, next, what you're going to want to do is get yourself 1 to 2 trade lines. This helps for a multitude of reasons because there's different types of trade lines. There's trade lines that have very high limits. There's trade lines that have very high credit age because essentially what a trade line is being put as an authorized user on somebody's account. And that can be a good thing and a bad thing. It's a bad thing if you're getting put as an authorized user of somebody who doesn't know how to manage the credit. So somebody who has a credit card, but they be having late payments, they be having their utilization high. You don't want to be an authorized user on that because essentially what you're doing is you're inheriting their credit, not their entire credit, but you're inheriting the credit from that specific account that you're an authorized user on. So you only want to be an authorized user on somebody who is trustworthy and responsible. Now, the reason why I say get 1 to 2 trade lines is because that's gonna boost your credit score. If it's somebody who has a high credit limit, you're gonna have a higher credit limit reporting on your credit report, which is gonna lower your utilization and bring up your credit limit, which is a great thing. If it's an account that has a lot of age, it's gonna boost your credit age. That's the one reason why I got some trade lines because everything on my report in that when I fixed my credit in those 4 months, my credit was lit. Everything checked the box except my credit age, and I'm gonna explain to you in a little bit later why my credit age. Not a little bit later, but I'm gonna explain to you within this slide why my credit age was so low. But my credit age was low, so I got myself 3 trade lines actually. Shout out to my grandma because she's the reason why my score boosted up so fast because she added me as an authorized user on 3 of her credit cards. and she's had these credit cards for a long time. So it boosted my credit age from 2 months all the way to 3 years. So shout out to you, Bella, because you held it down, and now I'm putting on everybody so they can know what they got to do. Because there's ways you can get trade lines. You can ask a family member, you can ask a friend. That's the thing. When you're asking these people for this, you want to make sure they either understand credit, or you just explain to them why you need this, because it does not affect them. Adding you as an authorized user is not going to affect them in any way, shape, or form, because it's not your account. Especially if they don't even give you the credit. Let's say you're authorized user on a credit card. They don't have to give you the credit card. They don't have to give you the credit card. All you want is the credit to be reported on your credit report. You don't really need the card. I mean, unless you want it. That's a conversation you can have with whoever you're gonna be asking. But all you're doing this for is to help you. So you gotta let them know, like, this is just to help you boost your score. It's not gonna affect you in any way because you're inheriting their credit. They're not inheriting your credit. It's their account. That's their credit card. That doesn't even make sense. So hopefully you have somebody who understands that and wants to help you, because that is one of the fastest ways to boost your score. Being added as an authorized user, g- game changer. Now, you pay rent, right? Almost everybody pays rent unless you're paying a mortgage. But if this is strictly for people who pay rent, did you know that you can report your rental payments to the credit bureaus? There's some website. I'm gonna put the link in the description for all of these. And no, this is not no paid ad. I don't get anything from it. I just want to help you guys. There's websites where you can upload your lease agreement with whoever you're living, and they will report your on-time rental payments to the credit bureaus. One of them is Rent Reporters, another one is Rental Karma. I'm sure there's more, but those are the two that I used. So that's why I bring those up, because I personally use those and they help boost my score. Because what I did is, what's good about these is that, yeah, you're making your payments on time every month, so it's good. You're getting positive payment history, you're reporting your rent. But what's dope about these two websites is that you can backdate your rental payments. And why is that so important? Because that's going to add age to your credit report, because you can backdate. It used to be with rent reporters, it used to only be you can only backdate up to 2 years of credit reporting. Now you can backdate up to 10 years, which is crazy. Rental Karma, that one I know you can rent backdate for up to 10 years. And the reason why I know with Rent Report is that you now can report backdate up to 10 years, because I had clients do it. So imagine adding 10 years of on-time payments to your credit report. That's gonna boost your credit score crazy. So Rent Reporters, Rental Karma. Link is gonna be in the description to both of those. Now, remember when I said, when I was talking about the trade lines and why my credit age was so low? It's because I added some credit builder accounts. Credit builder accounts are accounts that are, it's exactly in the name. It helps you build credit. Now, I'm gonna put the link in the description to three of them. There's a bunch of credit builder accounts, but these are the three that I used and I still use, because they're 48-month terms. So they help you build credit fast. So essentially what it is, it's like a savings account where you're making a on time where you're making a payment each and every month to a savings account, but it's not a savings account. Like, it is, but it's not reported to the credit bureaus as a savings account. It gets reported to the credit bureaus as either a line of credit, a credit card, or a personal loan. It just depends on which one you get and which type of account you open up. But since it's being reported as those credits, like a line of credit or a credit card, it's doing a bunch of different things. It's making positive payment history. It's bringing up your credit limit, which is gonna be also lowering your utilization. So this is why credit builders are very, very important for somebody who has bad credit or somebody who has no credit at all. Credit builder accounts come in super clutch because they boost your score fast. Like, I remember when I first got my credit builder accounts, each one of them, like all three, boosted my credit individually 20 points. So I got 60 points boosted within my first month because of these three credit builder accounts. And the thing is about them, another thing about them is that since you're going to be making your payments on time each month, when you make your on time payment each month, you get between 1 to 10 points boosted as well. So it's not just that initial It's not just that initial first boost that you're going to be getting. You're going to get a boost each and every month because you're making on-time payments. And if it's a credit builder account that is a personal loan that's getting reported as a personal loan, when you're making that on-time payment each month, what's happening? The account balance is lowering, which is boosting you up your score. Now, last but not least, if you're somebody who has no credit or bad credit, one easy way to boost your score is getting yourself a secured credit card. And it's also good because it's teaching you how to use a credit card. Now, a secured credit card, you're putting the money up. It's not an unsecured card where they give you a credit limit. You decide the credit limit with a secured card because you're putting the money up. So if you have $1,000, you're like, okay, I want to get the secured credit card. Here's $1,000. Your credit limit is now $1,000. I believe the lowest a secured credit card could be is $200. But yeah, the higher the better, because when it's time to upgrade to get a unsecured card, a card that comes with benefits and everything like that, then you're gonna be able to get approved for higher limits because you got a higher limit credit card. So like if you have a $200 secured credit card, once you finally are able to upgrade, they're not gonna give you no $5,000 credit card. You're probably gonna get something in the hundreds. So if you're gonna get a secured credit card, try to scavenge up some money, save some paychecks, hustle, do what you got to do because you want to get good credit limits. You don't want to have a bunch of little rinky dink cards on your report. This doesn't look good, especially when you're trying to, get higher limits, get cars, get things like that. You want to get higher limits. And actually, I didn't even write this one down, but secured loans. Secured loans is another way to boost your score fast. I'm gonna make a separate video on why and how a secured loan can help, but it's essentially the same thing as a credit card. But just because it's a secured credit card does not mean it cannot hurt you, because you can, just like a regular credit card, max it out and then boom, there you go, back to square one with bad credit when you're in the process of building it. You don't want to do that. So you want to treat a secured credit card just like it's a regular credit card. And what I always recommend for somebody who's new with credit, doesn't know how to manage it, like I did this for one of my clients who she's 41, but she's never had a credit card. She said she was always so afraid of it because she saw how much her sister struggled and she hated when she was out with her. She's like, "Oh no, I can't use this card. I can't." She's like, "I witnessed my sisters struggle with credit cards and trying to manage it." And she's like, "I'm not somebody who she knew that's what I liked about her, is that she knew herself. She's like, I know I cannot handle that, so I do not want to get a credit card." So what I did for her is I was explaining to her, just ease yourself into it. Use the credit card when you have the money. So if you have $200 in your bank account, use your credit card for only $200 on your credit card and then instantly pay it off. Don't wait till the next until the payment date, just to get yourself accustomed to actually using it and managing it the right way. Just do it that way. Use it, then pay it off. Use it, then pay it off instantly. Once you start getting comfortable, then you can start working. All right, okay, my payment due date is this date, so let me pay it here. Let me pay it before that, or let me pay it on there. But you just want to make sure you're always paying it on time and paying it off in full, especially when you're new with credit. Because once you're savvy with it and you know what you can do, and you got it on lock and you know how to maintain credit, there's different ways to going about it. But yeah, so if you're new to credit, just ease yourself into it. Don't try maxing it out and saying, "Oh, I'm gonna pay it this date." No, just take it step by step, baby steps, so you can get yourself accustomed to it. But yeah, and that just about wraps it up. This was just a video on talking about what a credit score is. I just wanted to put this out for you guys so you guys can understand. Share this with a friend. Put everybody on so they can know what and how credit works. Let me know if you like this video. If you found this helpful and informative, give me a thumbs up. Make sure you subscribe. Go ahead and follow me on all my socials. Yeah, it's Ricky Nikki Accounting on all social platforms, on Facebook, Twitter, TikTok, YouTube. I'm not on X. I might get on X. I don't know. We'll see. But yeah, make sure you follow me on all those. And if you made it to the end of this video, I really appreciate you. It helps the channel grow. And not only that, If the channel is growing, that means more people are watching, and the more people that watch this channel, the more people we're helping. We're not a channel that just talks about nothing. We talk about things that can help you change your entire financial situation and the trajectory of your life. So if that's what you want for yourself, you should want the same thing for everybody else. So do me a favor, spread the love, spread this channel out so more people can start growing and changing their financial situation. So appreciate you guys for watching, and